Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Hexaware, whether it is headed to all-time highs or not and whether you should buy at these elevated levels or not. So let's get started. First of all, a disclaimer that this is not the stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Hexaware, a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. You can ask me one question a day. Once you get that $10 membership, you'll have also access to my portfolio, my watch list, and a number of podcasts that I put up every now and then on markets and stocks. For detailed company and market talk on a number of stocks if you are holding, you can directly email me and we can work things out. Now about the company. Established in 1990, Hexaware provides IT domain intensive services for clients globally. It helps in business intelligence, application transformation management, business process services, etc. Serves a number of industries such as banking, insurance, capital markets, manufacturing, and so on and so forth. So they are not limited to one particular industry or few clients or concentrated with few clients. The company serves a number of different diversified industries and spread across the globe. Have offices across Asia, Europe, and North America, as I explained. Market cap is around 12,000 crore, and it has grown something like 70x from those 2001 levels. And this is the kind of growth that this company has shown from about 5-6 rupees at that point of time to be about 460-470 rupees today. If you look at the financials of the company, then the sales went up. So sales went up by around 14-15%, but the profit remained flat at around 152 crores, same as last year first quarter. It is virtually no debt. There's very low debt in the company. High promoter and institutional holding, only 6% free float is there. A return on equity of 25%, which is extremely good, strong in the IT domain. Operating profit margin of 16%. So it is one of the best in this business in mid-cap IT segment. If you look at the performance of the stock, then it did appreciably well from 2015 to all the way to 2018 or so. Had declined over 50% from 2018 Jan till this March fall. We were at 220 or so. So from 440 it declined to around 220 odd. Made a recovery but fell 50% again, as I explained in March. So in March it fell around 50% from the highs. Results have remained good, but the stock hasn't performed that well over the last 2.5 years, and now it is returning back to its mojo. So although the performance on the ground, performance on the balance sheet and profit and loss account has been pretty good, but performance on the stock market front has not been that great for the stock of Hexaware. But now with IT coming back into picture, with IT coming back into mainstream, you can say, with traders and investors, Hexaware has also done very well from March onwards, more than doubling from those levels. Currently it is on the cusp of a breakout. 515 is a major breakout level. I'll talk about it during technicals, but it is on the cusp of it, but is not able to you can say cross it. Valuations are at 24-25 times, which is attractive considering the kind of returns that it is looking like giving, although it is slightly stretched at 460-470 rupees. Why the upmove has taken place in the stock? Demand for technology increased from March onwards, and we all know with work from home, etc. And tech companies did not immediately go up. It was the pharmaceutical pack that went up because demand for drugs and medicines was also extremely huge. But now we are seeing over the last 2 months or so, IT index performing, and this company also doing well. And there is a clear cut indication that money is coming back into IT and coming back big time for at least a slightly longer time frame than just a month or 2 months, probably for a year or so at least. This culture of work from home and this thing of using internet, using technology on all fronts could be the next thing for the next decade or so, and this is sustainable, and that's why big players are getting into IT services, domain companies, etc., and Hexaware is no different. uh, Remember that the stock and the sector itself was out of favor for the last 2.5 years, from 2018 till right now, so more than 2 years or so. The stock has done virtually nothing, has gone down on a gradual level. So the recovery had to take place, even if we say that it would be a correction of that down move. The recovery had to take place, but now it looks like we could be headed much higher from the levels that it is currently trading at. In March, it was extremely underowned. There was massive selling by all across the board by everyone. And so at 220, 210, it looked like it was extremely underowned, and that's why the up move took place. That's why there was heavy buying. People looked at stocks which had sustainable growth in front of them in different sectors and invested into them. Large players invested into you can say market leaders in their domain in every sector possible, and all those stocks have went up 2 3 4x. Hexaware has become double from there, which is a reasonable return considering from Feb March onwards. It's been just 6 to 8 months. uh, there is a continuous business expected in the next few years. There's an expectation that the next 2 to 3 years we'll see sustainable growth in the company and the sector itself. If you look at the technicals of the stock, have scaled all strong resistances. So in February, March, we saw that it just broke all kind of supports and went to 210, 220, which was a 5 to 7 year support, and that's where it just consolidated and then began this up move. Right now, the stock is around 470 or 460, 470. 350 to 380 is a strong support. Any dip towards there, any major decline towards 380, 390 could be looked at in the stock very seriously. If the numbers continue to be good, if we can look at the stock at those levels between 380 to 400. This looks like a multi-year breakout. I have very little doubt that the breakout will not sustain. I think it will sustain, but when will it take out those 515 levels? That is crucial. That 515 is extremely important. Now, the biggest issue that has taken place, technically speaking, has been the fact that 475 has become a resistance, as it is the delisting price that has been agreed upon by the management. So 475, to take out 475, it would require a couple of very good results, and probably at this point of time we could see consolidation and little bit of decline in the stock, rather than you can say a clear cut up move. But I don't know, anything is possible, so wait it out. Probably another 15% move, and then take a call on the stock. Above 515 we could see even 680 to 750 levels on the stock. The 50 DMA is around 410, which can also be considered as one of the buying range, or a level where you could really get into the stock. So what needs to be done? In my opinion, add on major dips. In terms of numbers and fundamentals, the stock looks extremely good. Will perform well if held for you can say 5 to 8 years. Add on major dips or consolidation. Don't add immediately. Wait for declines to add on to the stock, and have less than 5% exposure in the stock. So this was my video on Hexaware. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.